Hello everyone, welcome back to Financial News in Palos Heights. And of course we have Paul Municle from Ameriprise Financial, myself Ron Jankowski with Channel 4 in Palos Heights. And we're bringing you financial news as we can see and as being reported. I'm having trouble getting those words out, Paul. It's too darn cold out there. Anyway, Paul, I'll let you take it.
Thanks, Ron. Oftentimes this first half of the show we've been talking about the trade wars or what's going on with big businesses. Today I'm going to give you an updated report on what's going on with small businesses, which many people will say really is the lifeblood of our economy. So I'm going to take it away with our data on small businesses. The National Federal of Independent Businesses released its monthly Small Business Optimism Index this morning. The measure came in modestly ahead of expectations, but did remain near the lower end of its intermediate term trend. Now this index is also down from the all-time high it attained in August of 2018. It reached a reading of 108.8. This high, however, was somewhat of an outlier, as it was almost a full point ahead of any other index reading in the report's history, going all the way back to 1974, which, if you don't do the math, it's 45 years. Like most other segments in the economy, small business owners have become more cautious in their outlook. High-profile trade disputes, like we've often talked about, geopolitical hotspots around the globe, and our significantly heightened state of domestic political turmoil all have contributed to a greater sense of uncertainty for business owners on the small end. In the latest survey, however, business owners' expectations for their own future sales remain relatively high, which is continuing to foster solid plans for new hiring and plans to make capital expenditures. And that last sentence is really optimistic for the economy, because if we've got several small businesses across the country, each hiring on one or two people, that can have a dramatic impact on the economy. And of course, if they plan on spending in their own business, that helps the economy as well.
Helps the economy, right, exactly. Well, I'm going to add to that, Ameriprise Financial is also giving us a morning research notes, and they read as follows. The S&P 500 futures are slightly higher as investors await President Trump's speech at the New York Economic Club.
You know, we're so used to seeing the market trend higher every day the last couple of weeks. We're in a bit of a pause here. There is a lot going on, and that's just what we're seeing now. Waiting to hear this speech from Trump, and the market will react.
Yeah, accordingly. The yield on the 10-year Treasury is easing slightly as bond markets reopen after the Veterans Day holiday.
Yeah, watch, we talked about in past shows, you know, yields are coming down. If you do have debt out there via a mortgage or floating line rate of credit, you may want to look into your options to refinance with rates being so low.
Opportune time for that. Hong Kong Hang Seng Index rose fractionally overnight after falling over 2.5% yesterday in the wake of escalating violence in the city.
There's a lot going on overseas.
Boy, there is.
Yeah, I mean, we've seen it affect even the NBA players when they went over to China,
right,
and their views on communism versus capitalism, and their markets react too.
Yes. And lastly, shares of Rockwell Automation, ROKR, higher pre-market following the better than expected fiscal fourth quarter.
And we're seeing a lot of that from a lot of the big companies. Earnings have come in strong. That is keeping the market going in a positive direction. And really, that is what should be driving the market. Not all the noise. It should be earnings, like you reported on.
Exactly. That's the proof of what is really going on. And then I'm going to the world capital markets. I'm going to talk about the S&P 500 is a plus 25% year-to-date. The Dow Jones is a plus 21% year-to-date. And the NASDAQ is at 28%. These are all pluses, by the way, if I did not say that, year-to-date. So market is very strong.
And those are just staggering numbers. If you think about past years, your own personal portfolios, if we were getting 4 and 5% returns, that was looking pretty good for a lot of people. These numbers are off the charts. This is a great year for the stock market.
Okay, anything else that you want to add to it, Paul? Otherwise, we're going to go into your money. Your money is going to bring a topic that's going to talk about taking steps before your 2019 tax return, and we're going to let Paul kind of guide us with some of those steps. Stay with us. We'll be right back. And we're back with Your Money. Thank you for staying with us. And as I had mentioned prior to the show, Paul is going to be talking about a topic which is really important to consider taking steps before your 2019 tax return. Paul, I'll let you take it from there.
Thanks, Ron. You know, just like you mentioned, 2019 is winding down. And before you know it, you'll be putting together everything to file your federal income tax return for the year. Federal income tax returns for 2019, they are due on or before April 15th, 2020. But if you're interested in potentially saving on taxes, you should start to plan now before 2019 comes to an end. We always recommend you talk to your tax professional about whether the considerations we're going to talk about today apply to you.
Okay, what are the steps that you should take right now, Paul?
Great. How you claim your deductions affects the steps you need to take now. So you have the option whether to take the standard deduction, that's amount set by law and adjusted for inflation, or itemize your deductions. However, fewer people may benefit from the itemized deduction option due to the recent changes in the tax law that took effect in 2018. The standard deduction nearly doubled from the year 2017 to 2018, and for 2019, the general standard deduction is $24,400 for married couples filing a joint return and $12,200 for single tax filers. At those dollar amounts, it may not benefit you to itemize your deductions, but thankfully there are still potential tax saving steps that you can consider.
Okay, are there steps that you should consider regardless how you claim your deductions?
There are, and I'm going to go through three of them
Okay.
right now.
Okay.
So number one, maybe save more for your retirement. One priority, if you are still working and contributing to a workplace retirement plan, is to maximize your contributions to that plan. Dollars contributed to the plan on a pre-tax basis reduce your taxable income, which includes your tax bill. Option number two, or plan number two to think about, is take advantage of other pre-tax savings options. So for example, you may contribute money from your paycheck to an HSA plan, a health savings account. This health savings account, is going to build up funds that ultimately can be available on a tax-free basis if used for qualifying medical expenses while reducing your taxable income. More than that, any HSA money not spent this year can continue to grow on a tax-advantaged basis and be used in the future to offset out-of-pocket medical expenses. Of course, I'm speaking in generalities about HSA plans. Always consult your plan provider before taking any action on that. And the third thing to consider is offset capital gains with losses before the end of the year. So for example, if you have taxable investments that are currently in a loss position, you can sell some of those investments and deduct those capital losses from your capital gains on a dollar-for-dollar basis, reducing your tax liability. To the extent your capital losses outpace capital gains, you may also deduct losses up to $3,000 of ordinary income, and unused losses can be carried forward.
All right, then what steps should you be taking to maximize if you do itemize?
Perfect. So we talked about if you take the standard deduction previously. Now we're going
Right.
to talk about if you choose to itemize.
Right.
There's a few points to consider here. One, make your January mortgage payment before the end of December, as you may be able to claim the interest portion of the payment as a deduction in this calendar year. Point number two to consider is make donations to qualified charities before December 31st. And point number three, keep track of state and local taxes. up to $10,000 may be eligible to be deducted from your federal income taxes. And as always, as part of your planning process, consider if your total available itemized deductions are nearing the amount of the standard deduction. If they are, contemplate taking steps to qualify for additional or increased deductions. Donating to charity, making an additional house payment with mortgage interest, or paying medical expenses are common itemized deductions. Incurring these expenses in this calendar year may allow you to reduce your taxable income by more than the standard deduction. However, be aware of certain limitations and deductions that are no longer available as a result of the new tax law. Finally, if you believe you're closer to the itemized deduction threshold in 2020, you may want to delay deductible expenses until next year to the extent you are able to do so. Going forward, it might be beneficial to bunch deductible expenses in alternating years to utilize the itemized deduction option when you can.
Paul, if a viewer has a question, should they be talking to you or should they be talking to their tax advisor?
Yes, good question, Ron. If you have questions regarding your tax position, I am not a tax advisor and I don't give any tax advice other than general outlines like we've discussed today. So if you have a specific tax question, please consult your own tax advisor. However, if you have a question about your investments or financial position, that you can give me a call on, and you can call me directly at 708-226-3412.
I'm glad you remember that number, Paul. Okay, for Paul Minkle with Ameriprise Financial and myself, Ron Jankowski with Channel 4, we wish you good investment day.